Good morning, traders. So there was really low volume day yesterday. We didn't take a trade simply because no trades materialized. Doesn't happen often when there's just limited volume, but yesterday was the day. And with gold, the entry never came, but it did come later on in the New York session. So it was a very interesting setup because we had price boxed up. Now, if you remember, if we go down to daily time frame, I was preferring buys from this daily level here, but we still had a structure here and a daily level here, which was sort of rejected and broken bullish from this sort of area of liquidity here. Now, we did have a bearish break on the lower time frames, which came on the 30-minute time frame. So we had a bearish close below, so we could have looked at impulse short. But the reason why I probably wouldn't have taken this, because the candle closed quite a distance from the zone and it doesn't give us much clean range to this next level. If you did take an impulse entry on this, no problem at all. It did push around 13 pips into profit, so you probably would have secured that. But if it did then go back to entry, you would have closed that straight away simply because it was over 10 pips and it's towards the sort of rejection level here. But then we broke back inside the zone, which means the fake out is then active. But unfortunately, it didn't come back to retest, which would have been our entry. But what you could have taken, which Martin in our group clearly did, which was fantastic, he took the bullish break. Because of this fake out, this bullish break has a lot more probability to go the bullish way. And that's the beauty of this fake out. After this, you can even add risk to this position because it's a highly probable break because of the fake out prior. It was a pretty simple entry. We had a beautiful close above, and you could little wake back, and we could have taken the break of that high, which you did. So absolutely perfect, Martin. Well done. And we also broke above that moving average, which gives it a nice added confluence to continue to the upside. So now we're kind of still in free range on gold. So if you missed that move, you can't now look for a move. We have to wait for some sort of pullback. You've got to be patient once again. Now we're coming to reject this level here, which we can sort of see. So a beautiful entry will be obviously at the top of the zone here with a retest with the 50 moving average on the 4-hour curling round, which we can use for additional confluence to take that buy. But this is another scenario where we've just got to be patient. When gold's just floating around after a big push and a big move like that, we need some deep retracement. It might come and retrace to these next sort of levels here. But an important thing to remember is if you look left, we can see we have multiple levels here, but price just broke through that level cleanly here and also cleanly here, which means this support and resistance is sort of obsolete now. It can still come into play at specific levels, but once you break past with candles like this once and twice, it becomes a lot weaker, and we could be sorry, just having morning coffee. We could be making new supports, new resistance, new liquidity areas. So yeah, these sort of become obsolete now after you see two long pushes like this. So with gold, we've just got to be patient and see what materializes. But after that large move, I'm obviously extremely bullish on gold. A lot of people will look at this and go, we're having a head and shoulders, left head, right shoulder. That is true, but we're still extremely bullish. So you can't just simply look at a head and shoulders and think that's great, because you've got to go with the higher time frames and see if there's any other confluences. So on the weekly, we've got a huge bullish engulfing above the high. So the weekly couldn't look any more bullish at all. The daily, again, we're sort of coming to a double top, which we didn't actually hit, but we sort of just rejected lower, and we had a bearish engulfing here, but this bullish candle looks like it's just about to close, possibly an engulfing, which it will close shortly in a few hours. So nothing is saying sell whatsoever. So again, just because you see this pattern materializes doesn't mean it's going to work into play. The only way I'd take this head and shoulders is if we had a break below this sort of neckline here. I'll just draw this so you understand. A solid break below, and it'd come back for a retest using that 50 moving average on the 4-hour, which was support here as resistance. That's the only time I would even entertain looking for shorts on gold. Otherwise, we're extremely bullish, so I would be looking for buys. All right. So let's go down, have a look at new pairs. See, I've not looked at any of these pairs yet, apart from GJ. So let's see if we can see any opportunities which possibly might materialize this week. USD CAD, extremely messy range. I won't even look at this because it's just absolutely horrific. In this whole block here, I would not look to trade. We need some clear break. This is just indecision, fundamentally, USD and CAD and technically, so we just wouldn't touch that pair. USD JPY starting to look interesting. Obviously, fundamentals are quite mixed right now. Stronger USD to the yen, but we're looking bearish technically. So I just generally wouldn't touch this pair. I mean, I'd prefer for price to break bullish above this sort of mess and retest this level to entertain buys. Alternatively, I don't really like sells with a lot of liquidity rejections here, and again, I just am not keen on that pair, so we don't trade it. It's that simple. Euro CHF, not much there. I don't like trading that pair much either. Anyway, Euro CAD, we are bullish, so I'd probably, buys from this level are looking really nice, to be honest. But it's important to find the right entry. So we have it a 4-hour beautiful rejection candle here. So buys are probably looking good on EuroCAD, to be honest. Above all moving averages, apart from the 1 hour. So to be safe on these entries, what you can do, you just go down to the lower time frames, you box price up, you can see this. And what you'd do, you'd wait for a break of this structure, just like we were looking at gold before, then a retest, possibly using that 50 moving average as additional confluence for support, and then we can look to take that long. So that actually is a beautiful setup. And another example of when head and shoulders aren't everything just because you see them on the charts. Because this is the head and shoulders, left head, right shoulder, with the right shoulder actually pointing in the direction you'd go with it, which is obviously looking all good. But on the higher time frame, we're extremely bullish. We've had a weekly engulfing close above these highs. Also on the daily, we are pretty bullish with strong bullish candles. Yes, we've got a rejection from here and a strong bearish move here, but we're still bullish overall on most time frames, also including the 4 hour. So you've got to be very cautious when you're looking for these patterns. They've got to line up with other time frames. Unfortunately, this one does not. But if we did then break below this level, similar to gold, we would then look for the retest and then we can take that short. But this is why you've got to, sometimes I don't like taking just buys from these levels. You've got to wait for additional confirmation because we do have conflicting time frames and we're still just ranging in this block here. So don't rush into trade, wait for confirmation. Let's continue down. Euro USD. Very similar sort of setup. Again, we can clearly identify there's been very low volume the last few days from this sort of range. And again, we just wait for a break of this sort of range block here. We can see I won't be taking anything in this sort of pinball in here, so we'd wait for a break below retest or a break above retest. Let's keep moving down the pairs. Euro AUD. Pretty messy, don't like that at all. It's been a very low volume this week, really not much opportunities. Euro JPY, messy, extremely messy range, wouldn't touch that now. Pound AUD, possibly the cleanest move we've seen, similar to gold. So see how we walked price up. We were waiting for a break and retest of this level to go long, and we just broke and never came for retest, which means no trade. But here you go, similar scenario to gold. Fate move to the downside, close back above. That means this buy is a lot higher probability. So we could have actually taken GA on the break of this solid candle above this high here. But unfortunately, I missed that. But yeah, we can now wait for pullbacks on GA to then go long. So this is starting to materialize. I'd like a pullback to possibly this level here with the moving average or this level, and then we can take that long. So that's actually lining up for buys GA. Pound CHF, again, just ranging. Got to wait for that range break at that whole block there. GJ, let's just remove everything. And I can see it's literally not moved since yesterday, GJ. Really nothing happening. pretty rangy. I don't really use trend lines anymore. I just use price action, but you can see if it helps you, see the charts, you can see we're just ranging. This is just indecision, up, down, up, down, up, down, just ranging in this block. But for me, I won't use those trend lines. We would mark it up with the price action instead, which is obviously priority over any trend lines you draw. And we need price to break out this range before we can attack it. Let's continue down. Pound NZD. Large moves similar to GA. Fake move to the downside, break above. Very similar move to pound, GA, which is obviously makes sense because it's the NZD, pretty close, correlating pair-ish. So similar setup, would wait for a pullback retest to go long on pound NZD. GPP cards. Let's have a look. So this is an interesting pair. So we've come to retest this level here and we've rejected, but we are bullish above the moving average with previous strong engulfing. 4 hour, pretty bullish above moving averages. Obviously, we can clearly identify that as well. So when you see a pair like this, again, conflicting time frames, we just don't touch it. Preferably, I'd want to see a break above this level, a retest, then go long. Otherwise, to take this short, I'd probably need a break below sort of these levels here to come retest that moving average to go short. So conflicting time frames, I wouldn't be touching that at all. GU, very nice structure. We can clearly identify the trend here is bearish. We don't need experts to tell us that because price moving to the downside, coming to retest the 800 moving average with the 50 and below the 200. So shorts looking probable, but you can see all the pound pairs, they should have had this bullish shift, slight move to the upside, but I'm still extremely bearish on GU here. But I'd need price to either break below this level here and come for a retest to go short, alternatively the same above. Otherwise, we're not touching it in that range. We'll just ignore the index for now, and we'll just move down to the other pairs. AUD USD. We're looking for shorts from this level. We already got those last week, so let's remove everything now. Similar. So this is what you like to see sometimes. So if you are looking for shorts from a level and you see price break above and it doesn't sustain that break and then breaks back below, that's a huge indication that we are going to continue to the downside because it also produces that head and shoulders that you want, which is actually with the trend. So, excuse me. Sorry, guys. So, as I was saying, so when you heard me talking about head and shoulders before, but when they are with the trend, that's when we go for them. And that's what this is. So I've got the left head, right shoulder with the fake out. So what I'd love to see is some sort of retest possibly into this area to form a right shoulder. But you can see we're below the moving averages here. And we do have this level of support, which is beautifully lined up with these moving average. So it does look like we could get a short from this level here. We do prefer a deeper, possibly wick touch into this 62,800 area, but we might not get it. It might continue to the downside here. If you want to add your trend lines, fine. Again, I don't use them, but you can give you a bit of indication about possibly where you can look for TPs or at least possible some sort of rejection. But always remember to line them up with price action, like for example here. So you can see we've got multiple rejections at this level here. So you're most likely going to see a little rejection from here, and you'd wait for a break and close below to possibly scale in and things like that. So AUD USD so far out of every pair is looking the best. I've been looking for shorts from these levels and then continue to the downside. Or JPY. Sort of similar to AU actually. So bullish move, break. We can see we are quite bearish. Let's have a look. Well, actually, we are bearish, but we're kind of ranging a lot here, which I don't really like. Weekly, not much. Quite a lot of indecision coming towards the end of this month. I mean, when are we in February yet? Sorry, guys. Let me just have a look. We are not 29th January, so towards the end of the month, sometimes can get rangy simply because we're waiting for the monthly candle to close. So usually the last day of the month can get quite volatile because those monthly closures are obviously important to how they read the markets and how they perceive ahead of time. So JPY, probably wait for another retest of sort of this level here and then hopefully look for shorts to the downside. We've got else, Ord CAD, pretty much the same as Ord JPY. A lot of these pairs are correlating at the moment, which means pretty low volume for some of the pairs. Pretty down to the downside there. Pretty messy, extremely messy there. Enter the USD, bullish on this time frame. Pretty bearish on the higher time frames, but rangy on the lower time frames. So, but definitely shorts and USD. Got the left head, right shoulder here, similar to a few of the other setups. And again, we'd wait for a retest of these levels along with those moving averages, additional confidence to take that short. So that looks like a very high probable short. And the USD, which makes sense with fundamentals as well. What do we have here? Extremely messy range once again. There's just zero volume in the markets right now. And we caught this beautiful trade a while back. Pretty clean, bearish, structure. But just pretty messy right now. So we won't be touching that. CAD JPY, clearly identified with bearish, fake move to the upside, bearish break, lower low, lower high. So we're looking for shorts, but again, no confirmation is there, just ranging. NZG JPY, nothing. CAD CHF, really, that's probably nice. That's really nice price action, to be honest. I don't trade this pair a lot, but you can clearly see, we are bearish, lower low, lower high, lower low, lower high, going to retest this structure along with moving averages. I mean, it's that simple. That's all you need to look for. Use the moving averages, use the structure, look for bearish price action, which this is engulfing, and that actually looks like a really nice short back down to this level. And this is why I don't trade this pair. 20 pips, and these are 4-hour candles. So that is the exact reason why I do not trade that pair, but price action looks clean nonetheless. NZD CAD, pretty bullish. We can all identify that. Bullish engulfing, retest and moving average. Yep, buys look actually really nice on NZD CAD to this level. And again, another reason why I don't trade this pair, because the candlesticks are worth fuck all. That 4-hour candle is literally 20 pips. So the ranges aren't big enough to trade these pairs unless you use very large lots. And the spread's generally large as well, so I don't like doing that. USD CHF, again, looking really nice, bearish, but I think these are a bit more, with more pips, a bit better ranges, slightly. Still not really 17 pips. So yeah, I'm just not a fan of these pairs simply because of their ranges aren't large. But that looks very bearish. Left head, right shoulder, bearish engulfing below the lows, wick back retest. So I do probably anticipate price to fill this wick of around 70 pips. That's not too bad, actually, USD CHF. But remember, when you're looking at pairs, if you're unsure which has large range, just look at the average. Okay, there's a large 4-hour candle there, and that large 4-hour candle is 53 pips. So, range is okay, fair enough. Got quite a bit of range there. Not a lot for a 4-hour candle, but it's still enough to possibly entertain a trade. But for this one, yeah, pretty bearish, kind of like that. So that's probably a clean one. And that's it, guys. So I'll wrap that up there. Not a lot right now. Markets, again, have quite low volume, but you've just got to be patient, wait for the entries, and I'd look forward to seeing you on the charts.